You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Okay, let's unpack this. Welcome to the deep dive. We're not just skimming the surface today, folks. We are really plunging into the currents shaping our world. Today, we've got this crucial, detailed market and news briefing. It's our stack of sources covering the latest in global markets, geopolitics, all of it. And our mission really is to sift through all this material, pull out those essential nuggets for you, connect the dots, the ones that aren't immediately obvious. Find those surprising facts. We want you to walk away feeling genuinely well-informed about this complex web. Trade, currencies, commodities, geopolitics. It is a lot, I know, but we're going to try and make it compelling.
Yeah, it's a great challenge. Because what's always fascinating, I find, is just how interconnected everything is. Things that seem separate, they're usually not. You'll see pretty quickly, I think, how a trade policy shift over here can send ripples through currency markets way over there. Or, a single decision about oil can start reshaping alliances. We want to get past the headlines, give you that framework for understanding not just what's happening, but the really critical why it matters piece.
That's exactly the goal. So let's jump right in with trade policy. Definitely front and center right now. We had President Trump announcing pretty substantial tariffs on semiconductors are coming very shortly. That was the phrase. But then interestingly, he quickly added that major firms like Apple wouldn't be directly impacted. So a specific carve out there. And at the same time, the administration is gearing up to launch a renegotiation of the North American trade deal with Canada and Mexico. Everything points to that being, lengthy and contentious.
Right. And what that really signals, I think, is this very aggressive multi-front approach to trade. It's not just one thing. You've got new tariffs coming in, existing major deals like the North American one being reopened, and then new agreements being forged elsewhere. It's not just tweaking things. It feels more like a fundamental reshaping of how global commerce works. Definitely something to watch. And
speaking of new agreements, there's the U.S.-Japan deal. Washington officially signed the executive order to implement it. And it's quite a package, isn't it? A baseline 15% tariff on most Japanese imports. But also, a big commitment from Tokyo to buy 75% more U.S. rice, plus this huge USD $550 billion investment package. Japan confirmed the auto tariff cuts will happen within 2 weeks. Prime Minister Ishiba called the deal meaningful. Strong word. But then the negotiator Akazawa added that Tokyo still sees the tariffs themselves as, quote, regrettable. Oh. What do you make of that specific language?
Well, that's fascinating messaging, isn't it? It's almost a masterclass in strategic communication, calling it meaningful, that acknowledges the benefits, probably investment, the auto tariffs coming down, things they wanted. But saying the tariffs are regrettable signals, look, this core part, we're not happy about it. It plays to their audience back home, maybe signals to others they accepted this out of necessity, not because they love the whole deal. It hints at leverage they might want later.
That's a really insightful way to put it. Okay, beyond those big ones, we're seeing other moves too. Mexico is apparently considering tariffs on imports from countries they don't have deals with, including China. Ecuador is working on a new trade deal with the U.S. But here's one that really caught my eye. It kind of blurs the lines between tech, trade, and national security. This U.S.-based AI company, Anthropic. They announced they're blocking services to Chinese-owned entities and other, quote, adversarial states. The stated reason is to stop potential military use of their AI. Is this tech control aspect fundamentally changing trade talks now?
Oh, absolutely. I think it has to. This isn't just about widgets and tariffs anymore, is it? It's about controlling the core infrastructure of future power, strategic advantage. Anthropic's move sends a really strong signal that national security concerns are starting to override purely commercial ones in some areas. It adds whole new layers of complexity, and it forces that question, how effectively can you even enforce these kinds of tech blocks globally? What sort of retaliation might that provoke? Especially from places like China pouring money into their own AI. It suggests maybe a kind of digital fragmentation along geopolitical lines.
Fragmentation, that's a key word there. And it's those kinds of shifts, trade, tech, plus the specific economic data points that make the currency market so interesting to look at next.
They really act like a barometer, don't they? So, for instance, the dollar softened a bit. That was ahead of the big U.S. jobs report. Came after some weaker labor numbers earlier in the week. The euro, though, it managed to climb back over its 50-day moving average. That's a technical level trader's watch. But, the climb was a bit limited. There are still those political risks lingering in France. That confidence vote for Prime Minister Bayrou on Monday. Sterling also firmed up a little after stronger retail sales came out, although some earlier data revisions kind of softened the impact. Okay, but here's where I thought it got really interesting. The yen. It gained quite a bit of ground. This happened after Japanese wage data came out, showing the strongest rise in 7 months. And get this, real earnings, adjusted for inflation, actually grew for the first time since January. So you have those strong domestic numbers, plus the confirmation of that U.S.-Japan trade deal we just talked about. Seemed like a double boost.
It's a perfect example, really. A currency getting support from two strong narratives at once. You've got the internal story, positive domestic economic data like wage growth, signaling real health. That's good on its own. But then you layer on the external story. The trade deal, stabilizing things, removing some uncertainty. When those two things come together, internal strength and external stability, it creates a very compelling case for the currency, much stronger than either one alone.
Makes sense. And we saw other reactions too. The Antipodeans, the Aussie and Kiwi dollars, they posted some modest gains, seemed buoyed by just generally constructive risk sentiment. And the Canadian dollar firmed up a little bit too, ahead of both the U.S. and Canadian jobs reports.
Yeah, and the big picture insight here, I think, is just how much currency movements act as that real-time global confidence meter. They reflect everything instantly. Tiny economic data points, big geopolitical shifts, trade deals. When you see the yen react to both wage data and a trade deal, it's not just numbers. It's the market signaling a tangible reduction in uncertainty. That's the real story for people watching these markets.
Perfectly put. Okay, from currencies, let's shift to the real foundational stuff. Commodities. Crude oil, for example. It steadied a bit recently. There was some weakness tied to speculation about what OPEC might do next. But then Russian Deputy Prime Minister Novak came out quite clearly, emphasized the core OPEC producers are not currently discussing any production increase. Said there isn't even an agenda set yet for Sunday's OPEC Plus meeting. But then, almost right away, you get conflicting data points. August production actually rose by 360,000 barrels per day.
Lucky.
And the U.S. inventory data showed a surprise build in crude stockpiles, which usually points to weaker demand, right? So you have the official statement saying one thing and the data suggesting maybe something else. It's quite a disconnect.
It is, absolutely. And it highlights that classic tension, doesn't it, between the official pronouncements and what the market is actually doing. It's like watching a poker game. You hear the talk, but you watch the chips. It's really crucial for listeners to look beyond just the headlines. Look at those production numbers, the inventory data. They often give a much fuller picture of supply and demand than, diplomatic statements alone. The market tends to discount talk in favor of action.
And beyond just the supply numbers, Russia seems to be making some very clear strategic moves with its energy. Rosneft is going to expand oil exports to China via Kazakhstan. And work has apparently started on boosting capacity along the Power of Siberia gas pipeline. These aren't just straightforward commercial deals, are they?
No, far from it. If you connect this to the bigger picture, it really underlines how energy routes, energy partnerships are becoming absolutely central to geopolitical alignment, strategic autonomy. Russia doing this isn't just about finding buyers, it's about securing long-term markets outside of traditional Western routes. It's about deepening ties with key partners like China. It's fundamental to their strategy right now, a clear signal of how the global energy map is shifting.
Okay, and looking elsewhere in commodities, gold stayed pretty firm, around that USD 3,550 an ounce level. Traders waiting for that U.S. jobs data we mentioned. Copper prices edged up a bit too, seems supported by better sentiment in Asia and Europe. So what do these different moves tell us when you compare a safe haven like gold to an industrial metal like copper?
Yeah, that's a really telling divergence. Gold often does well when there's uncertainty or fear. It's that flight to safety. So its firmness suggests traders are still cautious underneath it all. Copper, though, they call it Dr. Copper, right? Because it's seen as a predictor of industrial demand, global growth. So the fact that it edged higher, helped by sentiment in Asia and Europe, suggests there are pockets of optimism, maybe manufacturing development activity. So the takeaway, gold reflects caution. Copper points to some targeted economic activity, maybe cautious activity, but activity nonetheless. It's not all doom and gloom, but it's not a roaring recovery either.
That's a great way to read those signals. Okay, let's zoom out now to the global stage itself. Geopolitics. Tensions, talks, alliances. Russia and Ukraine obviously still central. President Trump said he'll speak with President Putin soon, and that he intends to, quote, get the war in Ukraine settled, unquote. The Kremlin confirmed talks at the highest level are possible, but they stressed, significant work is needed first. And Moscow also repeated that any foreign troop guarantees for Ukraine are just unacceptable. Meanwhile, in Europe, EU officials made it clear, even if there is a peace deal, Russian energy imports shouldn't return. That signals a pretty permanent strategic shift, doesn't it?
It really does. And what's fascinating here, I think, is that huge gap between the, let's say, aspiration for high-level talks, especially from President Trump, and the incredibly deep-seated, difficult issues that need solving. Moscow immediately saying no foreign troop guarantees. That shows just how firm their red lines are. It makes a quick settlement really hard, regardless of the desire for talks. It's a reminder, isn't it? Real peace needs more than a handshake. It needs fundamental security issues addressed, and often those are conflicting.
Very true. Elsewhere, we saw tensions flare up a bit after 2 Venezuelan military aircraft flew near a U.S. Navy vessel that was in international waters, a reminder of other potential flashpoints. And in Asia, North Korean leader Kim Jong-un returned from a summit with China's Xi Jinping. Both leaders pledged to deepen their strategic cooperation, protect common interests, very clear signal there. And then, almost like a direct counter-move, you have South Korea, Japan, and the U.S. announcing plans for joint military exercises. Air, naval, cyber defense later this month. Plus, reports of secret talks between U.S. and Taiwanese defense officials in Alaska. These are very active strategic responses, aren't they?
Oh, absolutely. The really powerful insight here is you're seeing this clear global pattern. Strategic cooperation deepening among some nations, China, North Korea, for example. And that's being directly countered by others strengthening their own alliances and military cooperation. U.S., South Korea, Japan. It's not just random events. It's a real-time reflection of shifting power dynamics, a constant recalibration playing out along these emerging fault lines. It feels like a very active reordering of global security.
So after all that, what does this all mean for you? As we bring it together, it's just profoundly clear how interconnected everything is. Trade policies, they don't just change prices, they sway currencies. Commodity flows, not just supply and demand. They actively shape geopolitical strategies, alliances, and all the diplomatic efforts. They're constantly navigating these really deep conflicts and realigning powers, all happening at once. So just to recap the key things we've pulled out for you to keep a really close eye on. Those pending chip tariffs from the U.S., the upcoming U.S. jobs report, huge economic indicator, that OPEC Plus meeting on Sunday, what it means for energy, and of course these high-stakes geopolitical shifts, particularly in Asia and Europe. These are the threads weaving the story right now.
Indeed. And hopefully this deep dive has given you a solid framework for understanding what those shifts might imply. Remember, knowledge is really most valuable when you can understand it and maybe apply it to how you see the world. So as you watch these things develop, here's maybe a provocative thought to leave you with. Considering all these rapid shifts, economic policy, geopolitical alliances, this growing focus on tech control we talked about, what unstated, maybe overlooked technological vulnerability, something beyond AI, could become the next big flashpoint for international trade, for security? Think about what could disrupt the next critical supply chain or, redefine military advantage in a way we haven't quite grasped yet. Something to mull over as you watch these stories unfold.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.